Hey there, it's InvestorZilla here. Today we are talking about why I put $3,200 into Coinbase. How much more I'm going to put in if it continues to go down? Why do I think Coinbase actually did what it did over the past couple days? And finally, what do I think the stock could be worth? If you like this kind of content, please like and subscribe. So let's get started. So let's start out with what actually happened with Coinbase. I'm gonna admit and be honest here. I was super wrong about this stock. I expected this stock to come out and fly up in price. I mean, I was expecting 450, $500. Now, that started to happen for the first few minutes of trading, and then it went super downhill from there. I don't normally invest into IPOs or direct listings very often, but looking at Coinbase's financials, I really did want to be a part of this stock. Well, I guess what happened? Why was I wrong? I mean, I guess it comes down to two factors that I can see right now. I'm sure there are way more. The first one is the differences between being a direct listing versus a traditional IPO. The second reason is that I think this stock might just be misunderstood, and I don't think a lot of institutional investors know what to do with it. Now, direct listing versus traditional IPOs, I see three major things I just want to talk about today. There's probably, I could talk, I spend an entire hour talking about the differences, but I'll go with these three. The first is insiders. They have zero lockup period. Now, of course, this can depend, depending on the terms of the direct listing, but for Coinbase employees and investors, as far as I could tell, they could sell out day one. Think about that. Like if you're an early employee and you have options that are valued at $1 or $2, do you care if you can sell it at $300, $400, $350? No, you're making mad bank just by getting it out on the market. So there's a lot of incentive for you to sell. Now, the second thing is the company. The company itself did not raise any money. Everything that I can see is that the company put up zero shares, and that is pretty typical for direct listing. This doesn't mean it couldn't add shares in the future. It just means that the shares we are buying from are directly from, the early employees, the insiders, the early investors that want to put their shares up for sale. And finally, liquidity. There really, with the direct listing, there is no backing firm, which means there can be higher volatility because of no underwriter support for the stock. We could have came out and there might not have been enough insiders that were willing to sell, or maybe everyone wanted to dump the stock and the market became flooded. So let's just take a minute and look at some of the numbers here. And I'm assuming these numbers are correct from Webull. I mean, I have no reason to believe they aren't, but I just want to call that out that I'm basing that on the numbers reported at Webull. There are 23.74 million shares in the free float pool, and there are 196.76 million total shares. What this means is that there's around like 173 million shares not on the market yet, which puts that float percentage down to about 12% of the shares being publicly traded today. Now, let's look at the volume. It says 39.62 million shares were traded today. And that today is Thursday, the second day of trading. That means shares were traded more than once on average today alone. Think about that. How are we trading at a higher volume than the number of shares on the market? Shares are trading hands a ton, especially if we have big investors, big funds coming in and buying for the long term. Another thing to look at is I just want to compare the free float percentage with other companies. Asana, one of my favorite stocks, 51% of its shares are on the market. Tesla, 80.2%, and Square, 84.8%, all on the market. Now remember, Coinbase only has 12%. I really think it's going to be interesting to watch that number potentially grow over the coming days to see how that free float percentage changes. So now here's where I did my first small purchase. I put aside about $15,000 to put into Coinbase, but I didn't want to just dump it all in because I'm a little nervous of the stock. So I bought 5 shares at $335.33. And I think the stock is just so volatile. I just wanted to watch it for the day. And I would nibble 330, 320 was my thinking. So in between like meetings and work, that's what I did. So my second purchase, I caught this at like the perfect time. I'm so lucky. I wish I had actually potentially done 10 shares here instead of five, but either way, I did 5 shares at $317.81 for a total of $1,589.05. And I decided to stop here. This was pretty close to market close. I needed to get back to work on some other things that I was doing. So I just stepped away. I'm going to see what the stock does tomorrow and potentially do something very similar. So where am I at right now? I have 10 total shares. At the time of taking this, I had a market value of 3,240. In fact, after hours, it actually has moved to a small gain. I just want to be fully transparent here. This is a very small percentage of my portfolio. I'm by no means going all in. Just to give you an idea, I have $562,000 in my Fidelity account, which, it does include my 401k. That is just my Fidelity account. I also have an account at Webull. I also have an account at M1 Finance, SoFi, and Robinhood. I don't want to give anyone the impression that I'm going all in on Coinbase. I'm not that sure. I could be very wrong about my fundamental analysis of Coinbase, but I do think it's worth moving this up closer to maybe 1% of my overall portfolio as a spec play. Until I get more information, I'm going to be thinking about this as a spec play. I just want to finish up by saying Coinbase is bizarre. The market did not react at all the way I thought it was going to. Now, I'm about as confident as I can be to say that the stock is undervalued right now. But honestly, I've heard bear cases out there that make valid points about why the stock might be overvalued. I just don't have enough information yet. I think this stock could be $600 by end of year. I mean, honestly, I thought it should have been $600 by, end of Q1. Or, so maybe I'm wrong, but it could also be the complete opposite. Maybe the bears are right, and this is a $200 stock by end of the year. I'm placing my bet that right now the stock is undervalued and it's going to be closer to 600 at the end of the year. But who knows? Was Q1 of 2021 actually a fluke? Will revenue dive in Q2 and Q3? Like, is the stock going downhill from here? I find that surprising, especially when you start extrapolating out over the multiple years. But really, only time will tell. And I am hoping to be able to buy some more on Friday and then go into the weekend, hopefully happy with where I purchased it at. But let me know your thoughts on Coinbase. Have you bought Coinbase? Like, are you against Coinbase? What are your bear cases? What are your bull cases? As always, I really appreciate all of you and invest safely. See you next time.